and welcome to CRISIL Ratings podcast. I am Aditya Jhaver, Director, Large Corporate Ratings. In today's podcast, I would like to share the credit outlook for gold jewelry retailers. Revenues for gold jewelry retailers is expected to rise by 12 to 15% this fiscal, driven by sustained high gold prices and steady demand. This follows the already strong revenue growth of around 20 to 22% estimated for fiscal 22. Having said that, jewelry demand is expected to remain steady this fiscal, with volumes growing by 8 to 10%, touching pre-pandemic levels of 600 to 650 ton. Revenue growth this fiscal would have been even higher, but for the Russia-Ukraine conflict, which cranked up gold prices to around 55,000 levels. While prices have corrected a touch, continuing volatility will constrain volume growth in the first quarter, ahead of the wedding and festive seasons due to partial deferral of purchases. Nevertheless, elevated gold prices and improving operating leverage will result in margins strengthening this fiscal by 50 to 70 basis points to 7.3 to 7.5%. As for credit availability, lenders have been extending credit since last fiscal to jewelry retailers with good governing practices and healthy debt matrices. With demand stabilizing, business expansion will gather pace this fiscal to the pre-pandemic levels of around 200 to 250 crore per annum. However, slower to moderate expansion in the recent past has enabled a gradual correction in debt matrices of CRISIL rated gold jewelers, and we expect their TOL by TNW ratio to improve to around 0.8 times this fiscal against 0.9 times in fiscal 22 and around 1 to 1.1 times in fiscal 21. Consequently, stronger operating profits this fiscal will result in better debt matrices and will also keep the credit outlook for organized jewelers stable, despite higher capital spending and inventory. With this, we come to an end to the podcast. Thank you for listening in and stay safe.